something I wanted to kick around with Jay Taylor, who's the president of Taylor Hard Money Advisors. We've been seeing the price of gold and other precious metals starting to wake up from a very sleepy, very, summer doldrumy thing. And if we're finally going to see a race to 2,000 or beyond, no one else to give it the time of day, we will. 18 minutes after 6, and joining me right now is Jay Taylor, and he is the president of Taylor Hard Money Advisors. Jay, welcome to the program. How you doing?
I'm doing good. Well.
Is it fair to say that you would be a gold bug, or are you more reasoned about that? Give us a little bit of your history, if you don't mind.
Yeah, I don't know about if gold bugs are, I guess gold bugs is a derogative term for those of us who believe in free market money. And
well, I don't count myself among that. So, in other words, I really do like hard money. But I guess I didn't realize gold bug was considered a derisive term.
Well, I think it is. I think that people who come out of Ivy League colleges with PhDs who figure they knew better than the markets what prices should be look down on those of us who think that free markets are the way to go. But no, I think that, honestly, I got interested in gold going way back. I mean, this will date myself. In 1967, I was a college sophomore, and I had a professor at a small college in Kansas who was convinced there was a correlation between the debasing of a currency and the work ethic of a nation, and also the morality of a nation. And it made a lot of sense to me. I sort of thought about it. This was during Vietnam. We can remember, those of us who are old enough, what changes were going on during Vietnam. But it was during that time that we decided that we wanted to have something for nothing. We wanted to be able to not to have to work hard and save before we enjoyed the fruits of our labor, but have those fruits right now, and don't worry about paying for them later. So really, when Nixon took us off the gold standard in 71, that paved the way for the problems we're having today. It paved the way for the enormous amount of debt that has grown exponentially.
And also, wasn't that really the birth of enormous, never-ending growth of government, too, for that matter?
Absolutely, absolutely. And you see, the partners in this scam are the banking industry and the government. Because that, if you take gold away from the equation, then you can finance as much government as you want. I mean, people don't even realize that it's going to cost them. In fact, that's why Nixon took us off the gold standard in 71. Johnson or Nixon, neither of them wanted to tell the American people that both of those endeavors were going to cost them a lot of money, were going to cost them. So we went into debt to pay for Vietnam and for socialism, and de Gaulle said to us, we don't want any of your crappy dollars, those things you're creating out of nothing. Give me the real thing. Give me gold, which he was entitled to do under the Bretton Woods Agreement. So the gold started leaving the U.S. coffers, and Nixon said, no, we are the United States of America. We are the victors of World War II. We'll do whatever we damn well please. Go to hell, de Gaulle. And so that's when we closed the gold window, the international gold window, and that's when, if you look at the charts, we started seeing exponential growth in debt and money. And that's when I think the problems that we are having today, if you want to blame somebody, blame Nixon. But on the other hand, maybe Nixon didn't have a choice. Maybe the American people were just wanting to have a better life, and they were going to have one, and they didn't want to see the reality of what this was going to cause their grandchildren. But as far as that goes, we're still doing the same thing.
Oh, yeah. Well, what happened, though, is that we basically decided collectively, whether we realized it or not, we're going to live beyond our means. We're going to pay for war abroad and never-ending welfare in government and home. And all we did was just borrowed ourselves into a pit. And that's where we find ourselves right now. But there's very little conversation about this root cause of it, though. Everyone's saying, it's the Democrats' policies. And then the Democrats are saying, it's the Republicans' policies that got us here. What do you say, Jay?
Right. Well, see, that's why they had to shut Ron Paul out of the discussion, and why he has not given his just rewards at the convention right now. I mean, he was second, really, in the number of delegates. I think he had 190, and that was after all the powers that be tried to shut him out. No, the reason they don't want to have this discussion is because the people in charge of our system don't want it to change. I mean, by definition, the status quo, right? The people who are running the system like it the way it is. They like to have the ability to steal from the middle class, the people that actually create the wealth, the miners, the manufacturers, the inventors, the farmers, people that actually do things for us, the doctors, the dentists. They are all getting hosed big time. and the wealth is flowing to the government in the form of bigger and bigger bureaucracies and the bankers who are still keeping their big condominiums on Fifth Avenue and out on the ocean, out on Long Island. So it is a tragedy. It's a travesty, and gold would provide a free market solution. I think James Grant was on Bloomberg this morning here in New York, and he said, if you're looking for the gold standard to provide heaven on earth, it isn't going to work because human beings are human beings. But Grant went back and looked at it and said, look, we've had the most stable monetary system, and the bankers did extremely well during the 1920s and earlier on. And so stability, and I think I would argue justice and free market economics, because it'd be like if we would think it's absurd in America if we did what the Soviets did and determine, some committee determined how many pairs of shoes should be manufactured in a given year.
But that's what we do right now with the price of money.
Exactly, and that's half of every transaction that goes on. It's a much more serious problem having the Fed or any central bank determine how much money should be supplied and what its price should be than it would be if we had somebody in Washington deciding how many pairs of shoes should be manufactured. And, of course, they'd never get it right. And to think that the Fed can get it right now doing what they're doing is absurd.
Well, maybe what we're dealing with right now. Well, Jay, maybe, by the way, Jay Taylor's here. He's the president of Taylor Hard Money Advisors. What's the website, by the way, for...
The best website for people to go to is Jay Taylor Media. That's Jay Taylor Media, because I do host a radio show myself, and I'm on television quite often, and I do a couple of newsletters and things, too. So that's the best place for people to go to.
Well, you're speaking truth here, and one of the problems that I think that the Fed finds itself in, along with the federal government, is that it's boxed itself in. You have $15, $16 trillion on the books of the United States government as far as the debt. That's the on-the-book stuff, not the future promises. You go to the future promises, and my gosh, you're talking, 100 trillion, 200 trillion. I don't have enough zeros on my calculator, to take care of that. And so they have no choice right now, given this situation, the debt that's already there. They've got to print. They have to devalue as much as possible. They have to keep the interest rates artificially low because, my gosh, even if interest rates go back up to 2 or 3%, we're broke. I mean, we literally are insolvent in this country, right?
Right, and ultimately, though, there is going to be a day of reckoning, and they can postpone it, which is all they're really doing. I mean, I would like to think that we can grow our way out of this mess. I mean, wouldn't that be great if we can do it? Let's hope we can. I mean, I hope we can, because nobody wants to see the devastation that's likely to come when this thing breaks down. But honestly, I don't see how that's possible, because whenever Mr. Bernanke increases the money supply, he does it with more debt. And debt is growing exponentially, and income is growing at best. Well, I think GDP, the latest number, is 1.5% or something like that.
And even that, it counts government spending, which really shouldn't count.
Right, exactly right. And that's what's holding the thing up. So they don't allow the markets to decide. And because I think there is this notion that we can have a heaven on earth if we just elect the right politicians. And I think that's the fallacy and why we've gone wrong. Because people don't realize in this four-dimensional world there are limits. And so, the politicians will come along and promise the impossible gets elected because people want to believe that it's impossible. Just like going back to 1971, the politicians didn't want to tell the American people that there's no free lunch, that we can't have socialism and endless wars without paying for them. And we did pay for them in the 70s, though people didn't understand or make the connections that double-digit inflation heading for hyperinflation was caused by this policy.
And it's really continuing today, albeit at perhaps a lesser pace at the moment, but most of that's probably caused from the European slowdown.
Yeah, well, what I would say today is we've had inflation. We've had enormous amounts of inflation. It doesn't show up in the CPI as much, but it shows up in the stock market. And you've had a reallocation of wealth through the financial markets and through government. And so we've had our inflation and a redistribution of wealth from the people that create it to the people that manipulate the system. And so we've had inflation, enormous amounts of, a Dow that's gone to 14,000 from under 1,000 in 1982. And we've had housing prices that have gone to the moon and crashed because they couldn't be sustained at the unrealistic levels. We've had commodity price inflation. We have medical price. We have educational price inflation like mad in the United States. So we've had our inflation. It just hasn't shown up in the CPI, which I think is another manipulated number, perhaps, to a certain extent.
Well, I know John Williams from ShadowStats.com makes it clear that what has happened is that the inflation hasn't gone away. They just don't count it any longer.
They don't count it the same way, that's for sure.
All right.
Yeah.
So Jay, let's bring it around to what's here. You know, we're watching the Republican speeches last night, and I'm listening to Chris Christie. We're talking about how Mitt Romney's going to fix this and Paul Ryan is going to fix this. Will they possibly do what's needed to be done to really get us back on track? I mean, your opinion on this?
No, they'll just they'll tinker around the edges, and they'll do a few things here and there. And I must honestly say that of the two, I favor a Romney victory, although I probably won't vote for him. I'll write in Ron Paul, because I think you only encourage the guys to keep doing the bad things they're doing. I think that, you know, the Republicans still have a bit more of a free market perspective than the Democrats do. But that said, no, I don't think they're going to fix anything.
Why not? Why don't you think they'll fix it? I mean, we're looking at crisis in the face, really, here.
Yeah, I know, but let's delay it. Let's kick the can down the road, and let's maybe, just maybe, there's some magic we can work out here that will get us out of this thing. Maybe we can grow our way out of it. I don't believe that's possible. If I did, I'd be in favor of the status quo. But I think that it's just a matter of timing. I mean, you can't just keep increasing debt exponentially and malinvest the economy the way we are, because when you pump all this money into the system, what you do is you encourage capital to go to places that the markets aren't asking for it. You force capital into the housing market, into the .com market, into the telecom market.
Into Solyndras of the world, that sort of thing, right?
Right. And then you don't have the income to service the debt that was used to manufacture the money that caused those prices to rise. So I think we're heading for a disaster. I hope I'm wrong. And so I don't think to fix it, you'd have to change the status quo. You'd have to change. The rich guys that are controlling the system would have to compete fairly in a free market, and that's what they're not interested in doing. And that's why I say that we have more of a fascist economy than a free market economy now. It's moving in that direction. Both parties, neither one of them. They're both in bed with the same people, the people that control the system. Go find out who owns the Federal Reserve, and then you're starting to talk about why things don't change.
So you're saying, Jay, that for all intents and purposes, both parties are in bed with the banking cartel, the status quo?
Most absolutely, absolutely true. Look who financed Obama, the Goldman Sachs guys and all that last time around. They're there playing both sides. All these big banking interests are playing both sides, and they don't care which of the two win as long as it isn't somebody like a Ron Paul, who would actually turn the economy back to a free market economy, who would allow people to compete on an even playing field, who would allow banks to compete with the big money center banks in New York on an equal playing field.
So, Jay, oh, okay. Go ahead. Finish that thought. Sound like you.
I just think that all you have to do is go back and look at 2008, and of course they had to convince the American people it was in their best interest to be taxed from here to kingdom come to bail out the rich bankers. And as long as people don't know what's going on, they'll buy into that one. And so Bernanke and company got away with it. But what we really need to do is have a free market economy. And, certainly the people at the top aren't interested in that. I think the reason Ron Paul is so incredibly popular with the young people is because they're not fixed into the establishment yet. And they're hoping to have their fair shake going forward. And they realize that they won't have with the system fixed the way it is, with the debt that's being loaded on them into the future.
I also think that with the younger voters having supported so much of Ron Paul's thinking, I think it's because they realize they got nothing to lose.
Absolutely. That's absolutely right. And they don't see the gain. All they see is the debt that's being passed on. They don't have confidence in Social Security or any of those programs, and rightfully so, because, as you pointed out, the off-balance sheet debt is far greater than the trillions of dollars that are on debt. And there's stuff that's hidden in the military as well that doesn't get reported. So it's just really... It's a fraud. It's actually a fraud. That's what I think. The whole monetary system is a fraud. But look, it's not going to change because the people that own the networks, essentially, that own the educational system, that basically it's all the same thing. And the more the government gets involved in financing education and other things, the more people will be indoctrinated to think, groupthink.
And still getting collectively poorer as we move on. So, Jay, let me ask you, since you write so much, and you're also the editor of miningstocks.com, right?
Mm-hmm.
Mining stocks, precious metals, frankly, it hasn't been a good... I can't say it's really been a great year for people that have looked at hedging in precious metals. Mining stocks, of course, have been absolutely pounded into the ground and obliterated over the last year or 2 years. And I know big government likes that. They like that because gold has always been viewed as the canary in the coal mine. Are they going to be able to keep everything pounded down for much longer? I mean, what is your take on the forecasting is always a difficult job.
Yeah, timing is very difficult, but I think that ultimately markets win, and that's why I'm not optimistic about these guys being able to keep things going forever, because ultimately markets win, and the truth, it comes out because reality requires that ultimately. And so where is gold going to go? Well, the problem with measuring that and answering that question is that gold is measured by a yardstick that is totally unreliable, that is the dollar. And so what I like to do is look at gold relative to other commodities, and their gold has been surprisingly strong, stronger than people realize. I like to measure it in terms of the Rogers Raw Materials Fund, and after Lehman Brothers, we've seen a dramatic increase in gold. So you're right, over the last year and a half or so, gold has not performed well. The shares have not performed well. But the real price of gold, what an ounce of gold will rise, is still on a very strong uptrend. And most people don't realize that, although over the last year, 12 months, 15 months or so, it's been declining. We're still on an uptrend. So an ounce of gold would have purchased only 17% of that Rogers fund in July of 2008. And that's a fund that has oil and base metals and food items and clothing items in it. That's the Rogers Raw Materials Fund. But it went from 17% before the Lehman Brothers collapse, which I think was the real start of the credit contraction that we have starting now. It went from 17% to 43% in just 6 or 7 months. And it rose to 49% with recent European turmoil. It's now back at 44%. But the point is, it's on a strong uptrend. So owning gold means that you can buy more base metals, more food items, more energy, more clothing items than you could have not owning gold, and a lot more, from 17% to 44%. So I like gold, and the gold shares have come off. I think we're about to see a breakout in the gold price, and I say that because I follow the monthly average gold price relative to a 20-month moving average. And since the gold bull market started in 2002, every time that has touched the 20-month moving average, we've seen a major spike up in gold. So and it's been kissing that average now for the last 2 or 3 months, just hugging it, and it looks like it's breaking out now. So I could see, my good friend James Turk is suggesting that he still believes we'll see $2,000 by the end of the year. I think that's entirely possible, but who knows for sure. But the real price of gold remains on a strong uptrend. So I want to own that currency that continues to buy more.
I think it's interesting that at the same time that the mainstream, the CNBC types, the bubble vision people, I think is what they're referred to, the ones that are always trying to get people to invest in paper and nothing real, so to speak. They're trying to get we sheep to go into paper promises. At the same time, the central bankers around the world, from what I understand, are loading up on as much gold as they can buy right now. Don't you find that interesting?
I think that's probably true. I mean, it's hard to know for sure what the central bankers are doing, but certainly I think it's pretty obvious that it's going to those creditor nations, and gold has always moved where the wealth is. And so, the countries that are working hard and saving and producing more than they're spending are gaining wealth. And those of us that continue to live beyond our means are losing it. And so gold is moving. I'm not so sure that the Western countries are selling their gold either anymore, because they sort of need to hang on to it.
Well, see, that was my point. We're told, the investment experts are always saying that, as far as allocating anything in your portfolio towards this, that's it's a barbaric relic. You hear all that kind of talk. And then if it's such a barbaric relic, why don't all of the central banks, why don't all the bankers, why don't all the big wealthy people, like George Soros too, as an example, why don't they just sell it all? I mean, if there's no value to this.
Right, and Soros has supposedly been a big buyer of gold recently. So I think ultimately they know in their heart of hearts that gold is money. But we like to believe. I mean, human beings, and I'm no exception to this, like to believe what we want to believe. So I'm always trying to examine my own views about gold. For example, am I just believing this because I've got an interest in it?
Yeah, you're talking your book, right? Yeah,
I'm talking my book. Am I thinking my book, or should I really critically examine my thought process? And I think everybody is tempted to talk their book or to try to it's a self-interest. So people. Sometimes, you start to adopt some academic theme that sort of suits what you want out of life or whatever, and I think it gets back to this whole notion of believing you can have something for nothing, and that's the welfare state promises that, but it's a lie, and ultimately the lie is exposed, and I think we're starting to see that lie exposed now.
All right, very good. It's 6:38. Hey, do you have a moment just for a quick listener phone call here?
Sure.
Jay, all right. Yeah, I was just trying to didn't have my call screener up, Brian. That's why I was asking him on the intercom here. Hello, Michael. You're on with Jay Taylor. Good morning.
Good morning, Bill. Question really in regards to we've seen the price of gold go up, we've seen silver go up and come back down. Why haven't we seen a correlating rise in the price of diamonds?
That's an interesting question.
Yeah, I think diamonds are a very much more difficult market because you have to understand you have to understand the diamonds, and I think one of the reasons that gold and silver are money is it's easier to understand what you're dealing with. I mean, I wouldn't know a fake diamond from a real diamond. That said, I noticed the other day that there is somebody that is trying to homogenize or trying to have a market for diamonds, like an ETF for diamonds. And that'd be interesting to watch. I think diamonds, in some ways, perform a monetary function well in ways that let's put it this way: you can take diamonds across borders more easily than you can take gold across borders. You're only allowed to take $10,000, move it back and forth over borders for the most part. But diamonds, you can take a huge amount of wealth from one country to the next and move your wealth with diamonds. But why they haven't responded, my guess is it's just very difficult for people to understand. And I don't know that I don't know that they haven't. I mean, I don't follow the diamond market. I don't know.
Well, Jay, maybe it has to do with there are various qualities levels of diamonds, but an ounce of pure gold. But an ounce of pure gold is an ounce of pure gold is an ounce of pure gold. Yeah, I think
exactly.
I think that's one of the reasons why it has not been quite to the same. All right, Jay, I'm just up against the time constraints. I've already gone long on you, and I really appreciate you coming on. So
my pleasure.
You're looking at. I mean, are you going for the 2,000 by the end of the year, or do you think that might be a little overly optimistic?
I honestly don't worry about it. I buy gold. I own some gold myself. My family does, and we just consider it as money. And as long as its purchasing power is continuing to increase, that's what I care about. Because if we go into a major deflationary environment, which I think is very possible, in spite of their efforts to print money, and we don't have time to go into why I think that's possible. But if we go into a major deflationary environment, then the nominal price of gold could go down, and its purchasing price could go up. I mean, in fact, that's what happened after Lehman Brothers. The nominal price of gold went down, but its purchasing power went up because it went down less than copper and energy and all those other things.
And that's the important thing. Okay. All right.
Purchasing power.
All right. Very good. Jay Taylor, who's the president of Taylor Hard Money Advisors and also the editor of miningstocks.com. You can find out more there. And what is Jay Taylor Media, I think was what you said?
Yeah, that's the best place to go, JAYTaylorMedia.com, because I host my own radio show on the web and also do some TV appearances and things, and that's all there.
Jay, really appreciate the time, the interesting conversation. Thanks again.
Thanks for having me.
All right, 19 before 7, JTaylorMedia.com. We'll be right back, AM 1440 KMED, catching up on what else is going on, and we'll open up some other conversations, too.